I bought this gold coin back in 2009. It's a gold buffalo, and it's 99.99% pure gold. At that time, it cost me just under $1,000, to be exact, $992. This and a few other precious metal investments took a good chunk of my savings. It took many long hours lifeguarding, working in an ice cream cone factory, doing magic shows, and detasseling corn. This was back in Iowa. Instead of buying all the new video games and other luxuries with my paychecks, I really looked to the future. Now, this single gold coin has about doubled in value. It's just over $2,000, so it's just over 100% gain. A good chunk of this gain has come in the past few months. The government's virtual printing press is running hot, and the value of the US dollar is dropping. This, along with gold bugs and fearmongers, have really pushed gold prices higher. And some of the fearmongers, you could say, make Murphy look like an optimist. Some analysts are now predicting gold prices will climb to $3,000, $4,000, and even $10,000 an ounce. Although many of these same analysts have been claiming this over the last decade, and eventually they're going to be right. When that happens, they'll make sure you hear about it or their correct predictions for the following decade. And of course, they're going to ignore the timing as well as opportunity costs, which I'll explain here in a moment. So overall, with the chance of gold prices continuing to climb, why do I personally plan on selling my gold in 2020? Well, in short, I'd rather sell when public demand for gold is high. And when looking at Google Trends, I've seen a search or a volume spike in searches for how to buy gold this year. And the chart I'm throwing up on your screen shows interest over the last 5 years. Now, demand might continue to climb along with gold prices, but timing the top, consistently at least, is impossible. And on top of that, you've maybe heard let your winners ride. But in this case, I see too steep of an opportunity cost. In other words, if I kept my money in gold, what other opportunities might I miss? For example, I have just over 100% gain on gold in the last 11 years, but the stock market has returned 235% over the same time frame. And this outperformance isn't a one-off. Over the long term, the stock market outperforms gold. Now, of course, you can find longer time frames where gold has outperformed stocks. A few of my past viewers have pointed this out, but really those instances are few and far between. So as a long-term investor with history as a guide, I really like my odds in the stock market instead. Gold, and don't get me wrong, gold by no means is the worst investment out there, but just when compared to value-creating businesses, you could say it pales in comparison, pun intended. That's why I shared some of my favorite research last year on why gold is a bad investment. Contrary to popular belief, gold isn't really a good inflation hedge. Also, it wouldn't likely save you during an apocalypse. The probability of seeing a doomsday collapse in your lifetime or our lifetimes and gold turning into one of the top means of trade, that probability is close to zero. Still, I covered these 2 points along with 4 others in that past article and video, which I'll go ahead and drop a link down in the comments below. Well, this wraps up my knowledge share for the week. If you found this to be thought-provoking or useful, I'd really appreciate it if you just tap the like button down below. It really means a great deal to me. And if you'd like to see more ideas backed by research, you have the option to subscribe. But either way, thanks a lot for stopping by, and please, if you want, drop a comment down below.